Bitcoin is an inch from an inverse head and shoulders pattern, which could be the turnaround from this dump that has hit 30% top to bottom and hit our range breakdown target exactly. On the other hand, perhaps Donald Trump is intentionally crashing the stock market right now in order to refinance the debt cheaper and then run it back later in the year. Or are the stocks and yield and all that just a distraction and we should only look at the Bitcoin chart? Let's try to figure that out in this video so that we're ready to act, especially if this confirms, which is very close right now when I'm recording. So there is this theory circulating on social media that Trump and team is crashing the stock market intentionally in order to refinance this massive $7 trillion debt at cheaper rates. And in that case, maybe they're not done, because the stock market has only backed up a measly 10%. Which honestly isn't much, guys, if we look historically. But Larsson, I'm not interested in stocks and other junk, as someone wrote in the comments yesterday. Well, my friend, you should be interested. Because for the past half year, Bitcoin has simply just followed stocks, even though it has held up a little bit better than the stocks in this dump. So understanding what is going on with stocks and macroeconomics in general is good, even if you're only interested in Bitcoin price. The theory here is as follows. Tariff and trade war means stock prices fall. Then people sell those stocks and buy bonds. Then bond prices rise and then yields drop, which in turn lead to two things: cheaper refinancing and Fed cutting the rates on their own initiative without Trump having to fire Jerome Powell, which honestly seemed a little bit complicated. And then with US economy in better shape, Fed cutting the rates, markets probably turn around, making this long-term bullish. Also, this would give a very good narrative for Trump in 4 years. He could then say, well, guys, first I had to clean up Biden's mess. That's why stock markets dumped. Then look at the stock market from there. That would probably work. And the theory has some proof points. I mean, there is a tariff war, stock markets have dumped, yields have dropped, and the market does anticipate the Fed to cut rates significantly over 2025. And actually, this yield chart, if we zoom out, is setting itself up for massively lower yields. Do you recognize this chart pattern? Of course, it's not completed yet, that it will be only on breaking this neckline, but it kind of started looking toppy here. And I sort of smell this possibility. Already last year, here is the TA report from December last year, where I, by the way, also showed the possible head and shoulders formation building in Bitcoin. That was at 96,000. But now we're looking at yields, and I put the possibility of this head and shoulders already then. So our understanding of the stock market and the macroeconomics gives us clues to what Bitcoin will do. But only clues, because other factors could override. Let me read a little from the last TA report last Friday about the dollar strength index, or the DXY, because usually weaker DXY usually means stronger Bitcoin short term. Usually, but not now. Right now, for the stock market, they are worried about other things. Geopolitics, tariffs, economic slowdown, speculative local top. And the DXY drop is caused by a combination of other factors. US tariff policies, which lead to trade retaliation, strengthening euro due to more market optimism in euro as a result of the defense spending, which is pretty dumb but still, and weakening US economic indicators. Similarly, on the yields, usually weaker yields mean stronger Bitcoin. Because usually falling yields signal lower cost of capital for companies and an outlook of looser monetary policy, more Fed rate cuts. And I can guarantee you, if Powell comes out tomorrow and says that guys, I've changed my mind, we're gonna cut the rates by 1 percentage point. Stock's gonna pump, Bitcoin's gonna pump. But right now, investors are probably selling stocks and running to safe-ish US treasuries. Then the increased demand for treasuries drive bond prices up and yields down, meaning this chart drops. But if this head and shoulder completes and this continues down here to its target with massive Fed rate cuts, I think we can still have a massive bull run ahead of us, because over the medium term probably these relationships tend to go back to normal. But remember that it's still only giving clues. We still trade each chart on its own, because as I just showed, sometimes other factors override the usual relationship between the charts. Just clues, not predictions. So while stocks look absolutely garbage here, it's still just one minus point for Bitcoin. If Bitcoin price actually shows bullish signs, I will still look and act on that chart, not stick to why it should go down or up. And remember that our price target from the breakdown was reached on the freaking pixel here. Hope you're entertained. And I want to give you a proof point why this approach can be extremely valuable. If you remember from COVID, it was chaos in the markets. At that time, I tried hard to keep my head cool and analytical and just look at the charts, not at what the media is saying is gonna happen. And this video here from April 8, 2020, called S&P 500 Confirmed Bottom Pattern and Trend Reversal on Daily and 4-hour Candles. We have actually a confirmed bottom pattern on the S&P 500 index on short time frames. That was here. And the bottom was indeed in, and we went up massively from there. If anyone could catch the exact bottom of that one, I'd say that was mostly just luck. Most people either thought the crash wouldn't happen at all, or that it would go much deeper. I thought it would go deeper. But then, when it didn't, and instead we got an identifiable bottom pattern in the chart, I reacted immediately and posted that video, which at the time I remember less than 1,000 people watched. And those who did watch it, they didn't like the message because everyone wanted to hear it would go deeper at the time, if you remember, because many people had sold close to the bottom. 1,000 people only, even though I made some funny videos then. I have to get back to that. So here, pretending that the real wealth is toilet paper, so I'm using cash notes instead. I thought that was very funny. Anyway, so the point here was that we trade each chart by itself. The actual price action overrides everything that's happening around us based on media or whatever. So if BTC now completes a head and shoulders, which it might do here while I'm recording, I take action on that, even though stocks look absolutely sick. Just perhaps I'll be more careful with position sizing if the whole market is still burning around us. Same with gold, like the actual gold. Usually it has a positive correlation to Bitcoin. This period there hasn't been. Instead, the only risk-off asset classes has been bonds and gold, while Bitcoin is bundled with other high-risk return assets like tech stocks. So presumably people have sold their high-risk assets and bought the low-risk assets. So if you wanted to make money here, you had to buy the actual gold, not the digital variety. I hope you didn't miss that we launched the Commodities Pro portfolio with both commodities and commodity companies in Larsson Pro. If you missed it, watch yesterday's video. In that video yesterday, I tried to make a point with 3 legs for stability, which I illustrated with my tripod. That was crypto, stocks and commodities. But in reality it was 4 legs, because there's cash also, like actual cash on the bank account or T-bills or bonds with short maturity. But you never make 4 bullet points on a slide, because 4 means death. In Chinese culture, it's a very unlucky number. Also, a tripod with 4 legs is actually less stable than one with 3 legs. So then my analogy didn't work. Therefore, I will now revise my asset class allocation strategy to 5 legs: Bitcoin, altcoins, stocks, commodities, and cash. For me, the stocks that I'm interested in are the tech stocks. And in cash, I'll include treasury bills and bonds and stable coins and so on, even though it's not exactly the same. And therefore, my new analogy is this Herman Miller office chair, which I like very much. It has 5 legs and it's very stable, with some flex. This distinction also makes it clearer when Bitcoin or altcoins are trending up as a group. Right now, Bitcoin dominance continues trending up on the exact same trajectory as it has done since basically forever, since beginning of 2023. And the individual altcoin to BTC charts continue looking disastrous, most of them. Here is ETH to BTC, looks dead. Sol BTC dropped far outside its key support, and the total market cap of the speculative altcoins, so excluding Bitcoin and stablecoins, still looks really rough. So then Bitcoin seems the better category out of those. But then suddenly the day comes when that starts looking different, and altcoins start trending up versus Bitcoin instead. It's very useful to study the relationship between the asset categories, just like I showed yesterday with gold versus the S&P 500 stocks. And when the structure of these relationships change, we need to be quick. So, conclusion from today. Take advantage of diversification during troubled times in the market and make a careful, conscious allocation of size between the 5 asset classes: Bitcoin, altcoins, stocks, commodities, cash. You can't create much meaningful diversification within altcoins. They all crash when it's risk off. But diversification between, for example, Bitcoin and a leveraged bet on uranium is very real. And diversification between Cardano and Nvidia is also very real diversification. And don't worry guys, I'm not losing faith here. I still think that the best generational risk-reward opportunity, if we're willing to do the work, remains altcoins. Right now it doesn't feel like that because they're all down, but I think it will once again turn around and those crazy opportunities will soon be back. Just don't hodl them in downtrend when Larsson line is blue. The second best opportunity I think will remain Bitcoin, and we might get a setup here any moment now. Your job is to not lose the money until then, because then you don't have the money to play the casino when the odds suddenly change. Diversification between asset classes combined with a defensive approach when Larsson line is blue everywhere is how I avoid losing my money here. So now that prices have backed up to lower levels, I'm in a better position than ever right now. I think 2025 is going to become a great year for us when we sum it up in December. Just don't up on the way. ctolarsson.com, join Larsson Line Pro here and take advantage of our launch yesterday and everything else. It covers Bitcoin, altcoins, stocks and now commodities too. And cash. Love cash. Thank you, tack. CTO Larsson out.